What's up, YouTube? It's Joe Catchpolia sitting on the couch making some money investing in fractional real estate online, as usual. So today, I don't know if you have alerts set up. You can set them up either, directly on Lofty. You can set up some, some price alerts, or through Lofty Assist, you have a little bit more control over it. But I got some alerts that my some of the Peoria property, the tokens on that had got up to the point where I'm planning to sell them. So all these properties, when I buy them, I have a price where, I said when I do my initial review, I have a price where I think I should buy them, and then a price where I think I should start selling. I didn't sell all of them. I just really trimmed. I sold 30 tokens, down to, this says I have 119. I actually have 120. It doesn't show the one that I have trapped in the liquidity pool, but that's always annoying to see. Um, But, one of the things I end up, I mean, I don't want to say arguing, but one of the discussions I've been getting into quite a bit with people on Discord and through DMs and whatnot, a lot of people are of the mindset that real estate has to be a long-term hold, right? It makes that you just buy and hold, and that's how you make money in real estate. Um, and so what I'm doing on Lofty makes absolutely no sense to them. They're like, why are we going in and out of properties, so often? And so I wanted to talk a little bit about that idea of buy and hold, and also just sort of the idea of like getting stuck in thinking in one certain way. So in general, uh, when I started investing in real estate 20 years ago, I thought, yeah, you buy, you never sell. And that's the mindset. I read, a whole bunch of books about investing in real estate. But then I went to graduate school for land economics and real estate, and worked, it was very much finance heavy, and worked in, my first few jobs out of that was working for public REITs, and then a little bit I did some work for private equity in real estate, and realized that that's not what any of the institutions do, right? I mean, I say any, there's some that do it. But most of the time when we were modeling deals, we'd almost always look at a 3 to 5 year hold. There are certain institutions that's not true, that they buy and hold forever and are happy with very low returns. But the, most of what I would call the types of funds and groups that are trying to get, outsized returns in real estate, they'd always look at, a 5 year hold, maybe 7 year hold. Somewhere between 3 and 5 was most common. And it's because that is the time period that would maximize your IRR, but also give you a decent return, return on equity, right? And not over time, but so you get your 2x your equity plus a decent IRR. And so that made it, the high IRR is what makes it a good deal, but the decent, the doubling your equity is what makes it worth spending the time on, right? Like there's a lot of times, and I've talked about this quite a bit, where you can make a $25 investment and have an unbelievably high IRR, sort of like the little experiment I did on Saul's Lot, right? But if you can't repeat that and you have to spend a lot of time on it, it's not worth it to make $3, right? You have to have both a big chunk of money that you make, and the high actual return. Um, and so that changed my thinking a little bit, and so I started, uh, since that time, I sold my first property that when I bought, I expected to hold forever. I sold it only 3 or 4 years later. Had an incredible return on that, and have almost always done the same thing. I have, there's very few properties that I have ever gotten into since where I thought, oh, this is going to be a forever hold. Uh, and just the simple fact is, if you calculate your returns and how you're going to do on a deal, it's almost always, if you've created some kind of value, either by buying below market or adding value through a renovation or the way you're managing, you almost always get a higher return by selling sooner, because you get to realize that value that you created over a shorter period of time. Um, And so, I think if you're on Mogul, if you followed any of these properties, what they talk about, I think on almost all of them, is an expected hold of, well, I think they say 7 to 10 years. Oh, I'm trying to make me buy right there. Feel like they put it on all of these, and I don't remember where they actually write it. Uh, and then they talk about like having some secondary, yeah, hold period, 5 to 7 years. So, um, it's no surprise to me that they have that on there because these are classically trained real estate finance guys, right? They come from the institutional side. They understand, how what you have to do to maximize your returns. And yeah, I think I wonder if they have any that are different than that. Um, Take a look at my favorite one that they've got. That's just I have the most in this one. I felt like it would look like a awesome deal when they got it. Yeah, five, all of them, right? 5 to 7, and I think that's pretty typical. Now, of course, down the road they'll make some decisions on whether or not that's the right answer, and if they should sell sooner or later. If they should do a strategic refinance, give some cash back, lower, increase their yield, whatever it is. Um, this is a good time for me to stop and say, make sure you're doing your own due diligence on all of these sites. Just because I'm investing in some of them doesn't mean that you should. Just because I buy certain properties or I say, hey, this one's my favorite, doesn't mean that you should buy it. I have links to all the sites that I'm currently invested on in the description to this video. There's also a link to the Discord channel that I've set up that's just a bunch of us fractional real estate investors talking about this stuff every day about a bunch of different platforms. And you are welcome to join us if you haven't already. Um, oh, and please like and subscribe. So, in general, I do still believe in longer term holds like this 5 to 7 years. So I'm investing in a lot of the deals that pop up on here. It is still a little bit of an experiment. I've only been on this site, for I think I bought the first piece back in December is when I invested in this one. So even though I think they're doing a great job and I'm getting paid out, it'll be a little while before I put a significant, amount of money on there. Same with all of these, right? All the platforms. That's the way I feel. I've just been kind of feeling them out. Lofty, I've put a little bit more than the others just because there's so many different opportunities to play with. But this is the one that I wanted to talk about because um, it's on Lofty we have an opportunity that you just don't see anywhere else. So I've been buying share or tokens in Peoria since September of last year. My average price has been somewhere around $22 and change, so let's call it 23, and then after fees, closer to 25. Um, and I've actually trimmed a few times too as the price has gone up. And so if you look, one of the reasons I like using Lofty Assist instead of the Lofty website, there's they have a chart that goes back as far as since January of this year which is when I think he started tracking it. If you go on Lofty's website right now, it's terrible. You can't get anything. Um, oh, sorry, you can't get anything other than just the 30 days, or anything further than 30 days out. Oh, wait a minute, did they fix it? Oh, is I get 90? April, May. No, yeah, I'm just getting 30 days. Um, but he's been tracking data for a little bit longer, and so I like to see that. So I was buying way back here, and actually even before here, and then I sold some up here, and then I bought again when it dipped. This is an opportunity that we just don't see in real estate in general. Um, and I think some people think it's like, they know that you can't beat the stock market, right? Like that day trading that the vast majority of traders lose, right? And I think all of that is true, but this is not the stock market, right? There's the thing that really differentiates investing on Lofty in tokens in real estate and investing in the stock market is we can truly understand. And I know I've talked about this before, but I want to dig into, I'm going to just reiterate it here and then show you like why it makes such a difference. So we know what the value, we can have a really good idea about what this property itself is worth, right? And so it, no matter what happens to the token price, there should be, a reversion to something close to the real world value. And if there's not, if we don't ever get that, then we can sell the property in real life and get something close to the real world value. Now, there's going to be fees and it won't be, you know, maybe the property's not going to be in the best condition because we don't have the money to, as a DAO, to bring it up to where it should be. We've seen this over and over again with some of the ones that have sold in real life. But at the end of the day, you have this sort of floor that okay, if when I was buying this at 22, um, I even was buying it when it had a manager that I did not trust at all, and it's still, but the property value didn't change, right? And now it's moved over to Earl. He's his ecosystems, and I think that it is in good hands, which is why it's a little bit funny that I'm selling some now. But I'm only doing a little bit, and it's just because that the price is where it is, and so that kind of reminds me. Um, Even though I think that it should continue to go up based on having a better manager, and I think it'll be well run, it doesn't mean that it will go up, right? It's still there's no reason not to take some profit and to make some better bets with that money. So I sold about $1,000 worth of these, not a whole lot of money, but I'll buy into tokens that I think are significantly bigger discounts at the moment relative to their real world price. And so that's the game that I'm playing on Lofty, and I just keep rolling it over. Um, and it might seem a little bit silly, right? But this property, it has no rental yield. It has had it in the past. Let's see when we see that. I forgot. Is it just on the bottom? Yeah. It has had yield for a short time. This is right before the prior manager took over. They took it over. They shut the yield off. I think we'll get yield again sometime in the near future. But at the moment, I've made close to $0 from that. But now let me show you. Okay, so assuming these were the first tokens that I ever bought in the property, okay, this is my purchase price with all fees included, and this is my sale net of all fees. And so, okay, I made a close, 19% return. It's a pretty decent return. But because it was, the short period of time, my actual annualized return is 31%. I was pretty happy when I went and plugged that in, and then I realized I already sold these tokens. I sold these tokens on the last time there was a pop, and so I had to go back and look at which ones I was actually selling, and they were ones that I had bought in October. Well, they weren't even these ones, right? And so these ones, if they were these ones I bought in October, um, same thing, right? Same ROI because I'm just using my average token price when I do these. Just because I want to just show something, right? So same token price, same purchase and sale price, same sale date, but different purchase date, right? And so, okay, it was a 31% IRR on that one, but okay, what if it was the ones that I bought on October 4th, which some of them I thought were, but nope, when I went back and looked, no, I'd actually already sold those too, but that would have been 34%. So we see 3% difference just for that short period of time. But then, okay, they're actually ones that I bought in November. And so my annualized return on those are 46%. Well, okay, all of a sudden we've moved from making a 31% return to a 46% return. And it's just because of how, the shorter period of time that I held them, right? And then I actually, some of them, if I bought some as recent as February. And so if I were selling those ones today, which I'm not, these are not the ones that I'm selling because I'm still holding some, and if I sell too many, I will tank the price of it. But if you see these ones, if I had just bought those and sold, I'd be making over 100% annualized return. Well, that's just fun to look at, but this is actually the reality, right? I'm making over a 40% return, and I will then take that money and put it into another property where I think that there's a good discount for some reason. And so I think that the reason, I still think that this property, these tokens are selling below the real world asset value, but I don't think it's a very big discount. And so there's not nearly as much upside in these tokens as there is downside. And even though we have a new manager, there's still some risk, right? Because the manager that these were taken over from. There's still all that mess going on. This is one that had been managed by Yom. It's now managed by Ecosystems. They haven't settled all the problems that they've had with Yom as far as turning over the other properties. He's said this is fully turned over now, although it looks like maybe we got a bill that is possibly still in dispute for it. Um, if that turns into a huge legal battle, it could end up hurting, what we do with this property in the short run, right? I mean, it might get tied up in that and be a problem. Now, I don't expect that. I think that it's one that looks like it's gotten out clean. Who I don't know. But so when I'm at a price where I'm making a great return, why not sell some? If the price dips, if it gets back down to my 22 price point, I'll definitely buy some more. But until then, it's one of those things. It's really hard to get hurt when you're taking profits, especially when your profits are, 46% annualized returns. And there are constantly additional, there's always new discounted tokens that the price of a property, those tokens went down either just because somebody needed liquidity, because there's some other problem at the property. And so as these opportunities to continue to come up, it's just it's just simple math, right? Even though and so I guess the real thing that I'm saying is I am still a believer in holding real estate for the long term, but if I'm going to do that, it's going to be properties like these where it's in a market I really believe in, right? They've done a lot of research on the market, where the people running it are people that I think have the right ideas about the way to maximize return. And the property itself is leveraged in a way that doesn't create an undue amount of risk. I mean, that's a big problem that I have with a lot of the lofty properties. Um, what was the last one? Oh, and that it's actually throwing off a decent amount of cash flow, right? And that there's no you know there's not a large risk of that stopping in the foreseeable future. And so for all of those reasons, if I'm looking at deals, I'm really excited about Mogul, right? Again, do your own due diligence on them and on their properties. I am still pretty new on there, but that's I've been really excited about a lot of their deals. Not all of them. I'm still not buying everything that they do, but a lot of them I am. On Compare that to Lofty, a lot of them have debt structures that I think create a lot of risk. That's not this particular one. A lot of them are in markets or neighborhoods that I don't think are going to do real well long term. That's a big part of my issue with this, right? Like, I'm happy with the new manager. I think we have a little bit of risk left over, in case that turnover isn't really as clean as we expected it. Um, but I think basically the neighborhood this one's in is going to make it always a somewhat tough property. Now, it doesn't mean I'm just going to sell it all, because at the moment, I think we could sell it in the real world and still make a profit. And so I'm not in a hurry to get rid of it, but I think taking some profit while I can, and then just really taking advantage of what the market's giving us on this platform, right? So in this platform, there's always there's always something on the marketplace that is of ridiculous value. And sometime in the future that might change. I think once they set up their lending, that's going to add to a lot of liquidity, and we'll see a lot of prices go up. And just over time, I think prices will go up on here as more and more people come in and put money on, right? You can see it doesn't take a whole lot of investment to move the needle on some of these. Um, but at the moment, I think that there's no easier way that I know of to make these very large returns in a short period of time, in a way that I think the risk is limited, right? And the reason I say that is because we have that real world asset value backing it up. So, I just wanted to reiterate that, because I end up talking about this with people so much. Turning these over quickly, it's just giving us such a better return. And I think that most of the properties on here are not set up in such a way that they make a lot of sense for a long-term hold. Some of them have managers that I like, but are just not in markets that I think are good. Some of them have or don't have a debt structure that I'm comfortable with. I mean, it's hard to find that combination of all, the right market, the right manager, the right strategy, and the right debt. Um, it's really hard to find properties like that on here. There are a few, and I'm invested in a couple. There's a few that I have that I'll buy when they get cheaper. But until that happens, I think the absolute best use of my time and money on this platform is to go after these discounts and to just turn them over relatively quickly, right? I mean, I think that I'm not doing it if I'm just making pennies, right? I want to make a pretty good, like I want this ROI to be fairly good in order for it to be a good use of my time. But then getting that XIRR up there, uh, is what really makes it just a profitable endeavor in the long run. And a lot of people, and when I started this, I really questioned, like, does it make sense to annualize these? Because I didn't realize how easy it was going to be to continue to reinvest. But at the moment, I'm never holding much cash in this account. I almost always find something to buy into, within sometimes within minutes or hours, but usually at least within days. The money I took out, I think I'll already be buying something, uh, you know, at least nibbling at some of these, and it'll be used up pretty quickly. Anyway, I think that's all I've got to say about this. Really, just talking, more about the velocity of turnover and what that looks like for us, and then again, too, I think I don't know if I made this point, but I meant to, is just sort of the asymmetric nature of some of the bets, right? Like if I know what the real world value is and I know I'm at a discount to that, um, the the upside, the downside risk is much lower than the upside potential in that situation because it's very hard to get pulled down to the downside when you're already at a place that you could liquidate and be okay. And so that's the other thing that I think makes this type of deal make a lot of sense. Where if you're buying tokens very close to the real world asset value, if something happens to that property and you have to liquidate, well, then you're just, the potential to lose money is there, where it doesn't exist nearly as strong, or at least it's not nearly as strong when you have, when your basis is so low in there. Anyway, now I'm done for real. Until next time, I'm going to keep making mistakes so that you don't have to.